Well, happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway, HomeServices, California Properties, first day of July, and the first day of the second half of 2024. Today, our class is going to answer or talk about the first rule of economics. What is the first rule of economics? Well, I'll tell you what I learned at college when I went to school at UCSD many, many years ago in just a few minutes. But first, let's talk about the latest stats. Right now, 4,562 homes are for sale throughout San Diego County. It's an increase of 62 from last week. The median list price of $999,000, a little lower than last week, with an average days on market, no change, 41 days. Pending sales are 2,410, 27 fewer than last week. Median list price, $886,150, 150, a little lower than it was last week. Average days on market, 25, one more day. Months of inventory, 2.05, a little bit lower than it was last week. And we'll talk about why in just a moment. Still in seller's market category, here is the total actives and total pendings trend line over the last couple months. You can kind of see pendings still kind of flat, actives still going up. Since last week, we saw 831 homes come on the market, 82 fewer than the week before. Thought that was a little bit interesting, drop of 10%. Median list price, $940,000, lower than the week before. New pendings, 426, an increase of 25 versus last week. So more homes went pending than the week before, and fewer homes came on the market. Median list price, $899,900, lower than it was the week before. Average days on market, 21, two fewer from last week. New pendings listed within the last week, 15. New pendings listed within the last 2 weeks, 182. So 43% of homes are still selling in 2 weeks or less, but only 3% sold in a week or less. That's a big drop from the week before, and we'll talk about that part of that economics lesson in just a moment. Since last week, how many homes closed escrow last week? 428, a big increase of 83, and that's why we saw the decrease in the months of inventory, because we had a lot more homes closing escrow. Median list price, $949,000, $950, higher than the week before. Median sales price, $955,000, also higher than the week before. Average days on market, 21, two fewer days from last week. Least expensive sale was in San Marcos, $200,000. Rancho Santa Fe, once again, had the most expensive sale, $9.4 million. Here's a chart showing new actives, new pendings, and new closed sales. See the big drop in the number of new listings coming on the market, and roughly the same number of homes went pending as closed escrow last week. Here's a chart with pricing. We can see that the average sales price, the median sales price, still higher than the median list price. Stephen Thomas came out with his reports on housing, and this is leading into that economics lesson. The expected market time this year versus in years past. So you can see the arrow is pointing to where we are right now. And you can see that the expected market time, the expected time it's going to take for a home to successfully close escrow, is going up, and it's going up rather steeply. Why is that? Demand has been pretty flat, but inventory has been going up, and this is what happens. And you can see, as we talked about before, where homes going into escrow last week, only 3% sold in a week or fewer. Market times higher. You can see the 3-year average before COVID. It's higher than it was back then as well. It's the highest it's been in several years. Why is that? Well, look at the active listings going up. We still have fewer listings than we did during that 3-year average before COVID, but we now have more homes on the market than we have in the last few years. Inventory is definitely on the rise. Meanwhile, demand has been going steadily down. And we have the lowest demand we've had since last year, but it's could cross that line again. We could have the lowest demand. So does that mean it's a buyer's market? Well, no, because we still only have about 2 months of inventory. It's just shifting a little bit. But let's look at inventory compared to last year and demand compared to last year in different price ranges. So if you look at the lowest price range, $0 to $500,000, year-over-year inventory changes up 106%. With a lot more homes on the market in that price category. 84% more homes in the 500 to 750 category. 91% more in the 750 to $1 million. So you can, the only one that's below 50 is the 2 million plus, 33% more. So overall, 73% more inventory than last year. Demand, on the other hand, in that lower category, down 27%. down 11% from the 500 to 750. We do have more demand in the 750 to a million category. And so that's absorbing, the inventory is being absorbed by that demand. Same is true for the other categories as well. So once you hit $750,000, we do have more demand this year compared to last year. The lower category, affordability affects people in that lower price category more because they don't have the ability to pay cash like a lot of people are doing in the higher price categories. They have to finance, and it's becoming more unaffordable, unfortunately. So first rule of economics, supply and demand. That's what it's about. The more supply you have and the less demand you have, well, it's going to take longer for homes to sell. And the different categories here talk about that. That's it for this week's Monday Market Moment. Don't forget to scan the QR code to track your home's value. If you have any questions about this economics lesson or the market, feel free to give me a call. Like I said, we are going into the 4th of July. Hope you have a great holiday vacation, weekend, whatever you're doing. And we're now in the second half of the year. Let's see how the second half goes as we proceed throughout the year. Have a great day. Look forward to talking to you soon.
Thanks for watching Monday Market Moment with Bryan Devore. To request a transcript of this week's report, send an email to brian@devorerealtygroup.com.